are in listen-only mode.
Good afternoon, hello, and welcome to this Midweek Market webinar. I'm Devarsh, and I'm joined by my colleague Vinay for this webinar. Hi, Vinay.
Yeah, hello everyone. Hello Devarsh bhai. Welcome to this webinar.
Right. So today we had a sharp fall in the market. Nifty was down about 2%. Bank Nifty was down more than 4%. So now the question is whether this is just one of the correction or are we headed much lower? What kind of stocks should we reduce position? Which sector we should be underweight? Which sector we should look for opportunity to buy at the lower level? And how has been the research performance? All these questions are there. We'll try to answer them. So first, I'll talk about the performance till now. See, April to December 23, we have issued 12 new ideas in the month of December. Previous five, including previous 17 were booked with the average return of about 15.9%. Average number of calendar days is 58 days. Some of the ideas where we were able to book profits in the month of December are Engineers India, GRSC, Jammu and Kashmir Bank, Subros. These are the stocks which is there on your screen. In this fiscal year, FY24, we have already issued 146 fundamental ideas. And including previous ideas, we have been able to book profits in 160. That is 93.6% is the success ratio. Only 11 ideas where we have booked losses. The average return per call is 15%. 160 ideas, 15% per idea, and 87 days is the average number of calendar days where these ideas were open. Similarly, apart from the fundamental side, we also have issued recommendations in most of the other categories like index future and options, momentum trading, e-margin, index strategies, index-based reports. I'll highlight some of them like e-margin, which is most popular. We have about 80% success ratio, 153 positive ideas, and average return post taxes and transaction is about 5.7%. Average holding period is just 12 days. 153 ideas and 12 days only. Similarly, 82% in cash, index reports and Diwali picks, all 5 out of 5 closed ideas. So these are the this has been the performance of research. Now this week we have issued some of the new ideas. Like first is the Granules. Granules is a pharmaceutical company, mid-cap pharmaceuticals, where we are asking investors to buy between 430 and 430 band and average it on dips to 384 with the base case target of 470 and a bull case target of 507. Similarly, another idea, Munjal Auto, 105 and 92 are the two bands, center points of the band where we are recommending 104 to 106 and 91 to 93. 116 and 125 is the target here. And the third idea is the Sharda Motors between 1385 to 1410 and another tranche between 1245 to 1270. 1547 and 1654 are the targets here. So these are some of the new fundamental ideas which have been released. These are absolute return ideas, mid-cap ideas where we see potential. So on dips, you can look at these stocks to accumulate. Now coming to the markets and the short-term view. First, I'll hand it over to my colleague Vinay. He will talk about the markets from the short-term perspective, and then I'll come in the end and summarize what should be done for the longer-term investor as well. So over to you, Vinay.
Yeah, thank you Devarsh bhai, and welcome you all in this mid-market midweek webinar. And now I'll take you through how Indian markets are looking on the basis of technicals. So today was a crucial day. We saw Nifty falling by 2%. This is the highest one-day fall since June 2022. So almost after 1.5 years, we have seen this kind of fall. So Nifty nosedived by more than 2%, and we saw that Bank Nifty actually fell more than 4%. So in Bank Nifty's fall is almost from the lowest one day, highest one day fall since March 2022. So almost 2 years, after 2 years, we have got this kind of movement on the downside in the Bank Nifty. So basically large cap private sector banks dragged the Bank Nifty's performance, and that is why we saw markets falling this much. So now let us directly discuss about the Nifty development on the chart. So this is the Nifty daily chart you can see on the screen. Now today Nifty has breached an important support of 20 days exponential moving average. This 20 days exponential moving average was placed at 21,573. So we closed around that level only. In intraday we saw that level breaching, and if you were to see the overall pattern on the chart, this upward sloping channel was there, which was acting as a range for the Nifty. Now on the downside, this upward sloping trend line, the lower trend line support has been breached by the Nifty in today's session. So this is a negative sign. And the bearish trend also gets confirmed with the looking at the oscillator. So this is the RSI, which is continuously making lower tops. While Nifty was making higher tops, RSI was forming a lower top formations. But the only thing we were waiting for was the confirmation from the price wise. So today we have seen that Nifty has breached the important supports, and now this RSI or negative divergence gets confirmed, and it is having a negative implication. So obviously Bank Nifty is looking weaker than Nifty, but Nifty has also breached the crucial support. Now the logical support for the Nifty comes around here. This is nothing but the 21st December low, which is placed around 20,976. So around 21,000, you can say there is a support for the Nifty, which is 600 points downside from this current level. If you were to look at the 50 days EMA, 50-day EMA is also coincides around 20,990. So this previous swing low of 21st December and 50 days exponential moving average, both are coinciding around 21,000 support, and that is why the significance of this 21,000 as a support increases in the Nifty. So this is the ideal support. And the gap today, we saw a gap down opening in Nifty, and because of that we have seen a bearish formation of island reversal on the daily chart. Now this island reversal is a negative pattern, and unless we see a decisive close above 21,850, every rise should be taken as a selling opportunity for the short term. So our view in the Nifty is that we should look for the short selling opportunities, and unless Nifty breaks above 21,850 again, the view remains bearish, and every rise should be taken as a selling opportunity. On the downside, 21,000 is a short-term support that we are looking for, which is coinciding by the 50 days EMA and the previous swing high, previous swing low, which was made in 21st December. So definitely there is a confirmation of a downtrend in Nifty, and we need to remain cautious as far as Nifty is concerned. Now let us move to Bank Nifty. Now Bank Nifty today nosedived by more than 4%. So Bank Nifty actually broke below its 50 days exponential moving average, where Nifty is far from that level. It is still at a distance. Nifty is still at a distance from the 50 days EMA, but Bank Nifty has closed below 50 days EMA. So definitely the chart of Bank Nifty looks weaker than the Nifty. Now this bearish head and shoulder kind of pattern is there, which projects the strong resistance around 47,000. So obviously 1,000 points from the here on the upside there is a resistance, and 50 days EMA is placed at 46,600. So we may see some recovery or pullback, but that may be short lived, and we may see that may be result into a dead cat bounce also. So what we suggest is, if we get some bounce in the Bank Nifty around 46,500 to 46,600, that level can act as a strong resistance, and from there again we can see resumption of the downtrend. And the ideal support for the Bank Nifty is seen in the range of 45,000 to 45,400. So this is an unfilled gap which was formed on 4th of December. So this gap is expected to be filled in the coming days. So around 45,000 to 45,400, there is a strong support zone, which is almost 600 to 1,000 points down from the current level. So we are passing through the result season, and it might happen that this range can act as a support, and again we see a pullback rally in the Bank Nifty. But as of now, the way it has closed, in the coming days we are expecting Bank Nifty to move towards this levels of 45,000 to 45,400. So this is the strong support, and we can say downward target for the Bank Nifty in this current downtrend. So overall Bank Nifty looks weak and we need to cautious, and at every higher level we can look for the shorting opportunities, and the resistance placed at 46,500 to 46,600. And oscillators are also moving on the downside, so direction of the oscillators and indicators like MACD and RSI is also weak. Now let us discuss this broader market. Now this broader market also, Nifty 500 index also has given a breakdown from the upward sloping rising wedge. We can say this is a rising wedge pattern. From that we have seen downward breakout. So this is also a negative sign as far as broader market is concerned. Now let us discuss Nifty small cap index. Nifty small cap index also, couple of days back we saw that this trend line acted as a strong resistance, and from that gradually it has come down. So till now Nifty mid cap and small cap indices have outperformed, but we never know, this outperformance can convert into the underperformance also. So we need to remain cautious in small cap mid caps also, because they have also faced resistance at the crucial juncture and they started moving down. So though today it is just 1% down small cap, but in the coming days we advise traders to remain cautious in the small cap also. Now I would like to show one another underlying which is giving direction and confirmation of the market trend. Now this is a nothing but the India VIX chart. Now India VIX chart is a fear index, we can say a volatility index, and it is based on the volatility in the Nifty stocks premium, option premiums. And if this India VIX is heading upwards, then we can say market could go down. So rising VIX is a negative sign for the equity market, and we have seen some breakout in the India VIX today. So this was the trend line which was acting as a resistance in India VIX, and today we saw that India VIX went up by 12%, and we have got this breakout on the upside. So if India VIX is going up, then there is a high chances that indices and equity indices may come down. So there is some confirmation from the India VIX, which is also called a volatility index or fear index. If that goes up, then Indian markets, equity markets can come down. So this is what I wanted to share. And one sector I would like to share over here is the which sector we can look for if market goes down, and at lower level which sector can outperform. So we believe that Nifty IT index is looking stronger on the charts, and in this kind of environment, after the Infosys TCS results and HCL Tech and Wipro results, it might happen that the IT index remain resilient against the market fall. So the buying opportunity, if somebody wants to create some fresh long positions at lower level, then IT is the index which is looking strongest as of now, and this can be looked at for buying at lower level. So IT technically we like, and at lower level one traders can definitely look for going long in the short-term trades. So this is what I wanted to share. So in a nutshell, overall market looks weak. Nifty and Bank Nifty has broken down, and we may see a 2 to 3% cut further on the downside. 21,000 is a strong support for the Nifty. On the upside, 21,850 is a strong resistance. Unless we see close above that 21,850, we have to take every rise as a selling opportunity. So that is what I wanted to share. Now over to you, Devarsh bhai.
Okay, thank you, Vinay. So now market looks weak, and there is a possibility of another 500 point fall in the Nifty. Around 21,500 once market comes down, 21,000 level from 21,500. What are the levels and what are the sectors where you should look at for the longer term? So we will come out with more MTFs and more stock future shorting opportunities for the trading side. Those investors who are looking to invest money for the longer term, we have a positive view on banking and financial services. We are turning little neutral to positive on IT. We continue to remain negative for the year in consumer staples, and this consumer staples means FMCG stocks and consumer discretionary stocks where there is a very high valuations. Where are the opportunities? Cement is a sector where we are more positive, and industrial and infrastructure. So infrastructure play in this correction, when market comes down to 21,000 levels, you should look at infrastructure stocks and cement stocks. That's where opportunities are there, and we will be coming out with ideas there. Real estate, we continue to remain positive. And one more sector where there are opportunity to invest money is in the automobile sector, especially the entry level cars and less than 125cc two-wheeler segment. These are the sectors or the pockets where you should fish. when markets come down. Right now, the advice is for the next fortnight, be on caution, be on a safer side, be cautious, reduce leverage. You can book some profits and increase up to 10% of the cash in the portfolio and wait for market to settle down. Once market settle down, then these are the opportunities where you can look for investing in the market: oil and gas, pharma, cement, real estate, and automobiles. These are the 5 pockets where we are longer term constructive on the markets. Right now, the dollar index is rising. The US treasuries are again have made a bottom and again going up. Today, the one of the Fed officials have suggested that the markets have discounted sharp interest rate cuts. That may not happen. Compared to markets expectation of 4 interest rate cuts, only 2 interest rate cuts may happen in this year. So markets have to temper down. The global markets are also correcting. We saw Japanese and other Asian markets starts correcting, and our market also have shown the first sign of correction. So overall advice is to remain cautious and wait for lower levels below 21,000 to start accumulating stocks. That's all from our side. If you have any questions, you can ask them in the chat box. We'll be happy to answer as many as possible in next 5 minutes. So we have come out with the Amit is asking about railway stocks. Today only, I think one of the ideas of ours in the railway sector has achieved the targets. So from time to time, when markets correct, it doesn't mean that all the stocks will come down. Many stocks will continue to outperform. In our stock update report of January 11th, we did come out with a buy report on Rail Vikas Nigam (RVNL), and that was a buy between 195 to 200 and add-on dips between 172 to 176. The targets were 217 and 237. Today, our base case target was achieved on January 15th, and today the bull case target of 237 was achieved. So about 19% return was achieved in railway stocks RVNL, and similarly we will come out with more ideas in the sectors where we like. We generally we do not answer questions on the stocks under individual stocks, only stocks where we have coverage. Bijal is asking about Ether. I think we have a positive view on Ether. Ether is under our coverage, so we continue to recommend at lower levels you can buy. Ashok Kumar is asking about HDFC Bank levels. We cannot discuss HDFC Bank as per the compliance rules. Any other question if you have, you can type in your question and we'll be more than happy to answer. So Tanmay is asking about JTL. We have recently released a report on JTL. You can look at once you log into our website and go to the research section, you will get the detailed report there. We have recommended a buy there. Our view is, so Shailesh Soni is asking about the real estate. So yes, real estate is a sector where we are bullish. This is the sector where the cycle has turned positive and we continue to like it. The luxury real estate projects growth is expected to continue on back of rising spending power in Indian upper middle class. Affordable real estate is likely to pick up as the government is going to give a lot of packages and expect a recovery there. Commercial real estate is subdued. So players who are into the luxury or affordable residential real estate, there we are longer term bullish. I am not able to answer questions on LIC, Bajaj Auto. These are stock specific questions. We will not be able to answer any stock specific questions. Vakil is asking why market has fallen today. A, because government, HDFC Bank results were below market expectation. B, RBI has sounded caution on the credit to deposit ratio of private sector banks. So many private sector banks corrected. And then the internationally dollar index went up and US treasuries went up, and US FOMC officials have announced that the interest rate cut which market is expecting is not going to happen soon. So these are the reasons why there was a excuse to correct. Markets were anyway had gone to higher level like 22 124, important level from narrative perspective. So it was overstretched and market was up for a correction, and that in such a scenario and any reason an excuse is chosen to correct. So that's why market has fallen, and as Vinay pointed out, around 21,000 is the next support. Okay, I've answered most of the questions. For tomorrow's market action, do go through our daily report, which we come out every day. Also, the podcast in which we give you the audio commentary, the short-term recommendations on the index side, index strategies. All these are products are available to benefit out of the short-term volatility. So make use of these, have more adoption, and you will be able to generate good profits for you and your customers. Okay. I think that is all for the day. I hope this has been useful. Thank you all for joining, and we close the webinar. Thank you, Vinay.
Thank you, everyone.
Thank you.